guys, welcome back to a brand new video. I'm RexFinance, and today we're going to be talking about CleanSpark and why I think they are set to skyrocket over the coming months and even over the course of the next 5 to 10 years. But it all starts with a press release that came out earlier this week that I think is really key and a key indicator as to where the share price of CleanSpark is going to go in the short term in particular. Now, if you're watching this video, I'm going to assume you at least know somewhat about CleanSpark and what they do as a company. However, if you don't know who CleanSpark is, if you don't know what they do as a company, I would advise you to go check out my channel and browse my catalog of videos, especially ones I've done on CleanSpark, and you're going to learn about CleanSpark as a whole and what they do. But bottom line is, this is a company that you guys are going to want to be invested in over the coming months and years to go in the future. So before we get into this, I should say I am not a financial advisor. I invest to make money just like all of you guys invest to make money, and every single investment involves a degree of risk, and CleanSpark is no different. So I am not a financial advisor, so please do your own research and due diligence outside of this video. I understand that these days, watching YouTube videos on companies is a way to do research and due diligence on companies, but I would encourage you to check out other resources, especially CleanSpark's investor presentation. Now, in particular today, I'm going to be highlighting an email I received from Matthew Schultz, the former CEO and current chairman of the board of directors at CleanSpark. He highlights very key details and even hints at what is to come for CleanSpark. But before we get into that email, I'm going to dive into the new SEC filing that I talked about earlier that CleanSpark filed earlier this week. This was a Form S-3, which is a shelf registration. And it's very important for me to note that this is not a share offering. This is not share dilution in any way as of now. However, using the funds that can be raised from a shelf registration, that's when the dilution can come into play. So filing for a shelf registration is a normal course of business, especially for public companies these days. This allows them to raise funds in order to complete acquisitions, mergers, or even just funding of the company in general. It's a very easy way for management teams to get cash quickly, especially if they identify a quick growth opportunity where they can either dilute current shareholders or just offer shares of the company in exchange for another business that they acquire. Along the lines of that is generally what happens to these shares that are made available via the S3 or shelf registration. Now, CleanSpark actually previously had a shelf registration open to the tune of $50 million. Now, this is considered a baby shelf registration, but as CleanSpark has grown and uplisted to the NASDAQ exchange, they now qualify for a full shelf registration. Now that is to the tune of $200 million for CleanSpark's most recent SEC filing. Now because of this full shelf registration, they now have access to $200 million worth of shares at their disposal that they can quickly divvy out to other companies in lieu of acquiring their business. The $50 million shelf registration that CleanSpark had open previously was created and filed for in 2018. Now these registrations, Form S3s, only are viable for 3 years. After the 3-year lifespan, either a new S3 has to be filed or the shares can't be accessed anymore. So because this was filed in 2018, you can certainly understand the time frame or the timeline that CleanSpark is operating on. 2018, 2019, and 2020 is the 3-year lifespan. CleanSpark was forced to make a decision either to not access the shares available via the old 50 million share registration or to file a new full shelf registration that gives them access to even more shares over time. Now, this is very bullish to me, as CleanSpark has never ever raised capital unless it is for growth or acquisition purposes. And this won't change anytime soon, according to Matt, the current chairman of the company and former CEO. Now, the growth or acquisition targets aim at counteracting the share price dilution by making each individual share more valuable. So, if a company can identify a growth target or an acquisition or a merger that makes their business that much more valuable, that will increase, ultimately, the value of each individual share, which is what CleanSpark has done historically. The share price always has just hummed through the dilution as if nothing had even happened, simply because the growth or the acquisitions add that much more value to the company as a whole. And when a management team member, specifically the chairman of the board of directors or a former CEO, makes a promise like that where any dilution incurred on shareholders will increase the value of their shares incrementally, That's almost free money anytime you can guess or anticipate this type of news coming. Now, through this $200 million shelf registration, I personally believe that we're going to see an offering take place or some sort of shareholder dilution take place for acquisition or merger or growth prospects. But no shareholder dilution or fundraising has been formally announced by CleanSpark, so why does this matter? Why do I think CleanSpark is going to rocket over the coming months if no funds were even raised from this shelf registration? Well, that answer might be pretty clear to some of you. I truly anticipate CleanSpark to raise funds in the near future. And in particular, let's take a look at the last paragraph of the email Matthew Schultz sent me. Matt blatantly states that the recent FERC 2222 ruling essentially validates everything that they have been discussing about microgrids and market participation, and they believe that things are about to get very, very interesting, and they're simply making certain that they are prepared if an opportunity presents itself for more growth or an acquisition or a merger, especially related to the FERC 2222 order ruling. Now, I'll leave a link down in the description below of what FERC 2222 means, but in layman's terms, it allows distributed energy resources or DERs to compete on a level playing field with utility companies and the power grid. Companies can now take advantage of the solar panels or the wind turbines that they've put up to generate power for their business. So, all in all, I am very bullish on the coming weeks, coming months of CleanSpark in general. And obviously, if you've followed my channel, I am a CleanSpark bull for years to come. This isn't a company I'm looking at selling anytime soon. My current plan is to reevaluate where I'm at with CleanSpark about 12 months from now, and from there I'll decide whether to buy more shares, sell some shares, or sell all of my shares. However, I strongly believe that my bullish thesis on this company is going to come true, and I'm not going to be selling shares of this company anytime soon. So next, let's move to the U.S. Embassy contract, which is just another catalyst on why I believe CleanSpark is extremely undervalued and will skyrocket in the coming months. Earlier this week, CleanSpark announced that they had been chosen to provide the switchgear for the U.S. Embassy in Africa. Now, this isn't the only U.S. Embassy that CleanSpark has provided hardware for. In the past, CleanSpark has provided hardware and switchgear in particular for the U.S. Embassy in Beirut. Now, that microgrid at the U.S. Embassy in Beirut, according to CleanSpark, from what they can see, never lost power during the massive explosion. So if you wanted to think about how powerful a microgrid is and how useful and valuable it can be, there's a great example. A huge explosion like that didn't interrupt any power going to the U.S. Embassy. And this new U.S. Embassy contract for CleanSpark was announced on the same day that they filed the S3 or shelf registration. On its own, the U.S. Embassy news should have risen CleanSpark's share price by 10% because, when a company is working with the United States government, they're a legitimate company. And currently, CleanSpark is only valued at $200 million, which is technically still in penny stock range. I don't think there are any companies out there that are working with the U.S. government that should be valued under $500 million or be in penny stock territory. The fact that the U.S. government chose CleanSpark again to provide the hardware for this microgrid at the U.S. Embassy in Africa just makes me anticipate more of these contracts from the U.S. government coming in the future. So in my opinion, who wouldn't want to be invested in CleanSpark at a value of $200 million? That is extremely undervalued in my opinion, and I think CleanSpark is going to be a multi-billion-dollar company sooner than later. So I just got done mentioning that I thought that news would drive the share price of CleanSpark up 10% in the trading day. However, like I also mentioned, it dipped 10% instead of rising 10%, and I believe that's because of two main reasons. One being of which a lot of people thought that the $200 million shelf registration was share dilution. People thought that CleanSpark were going to be putting $200 million worth of shares into the markets. That is simply untrue and a misinterpretation from several investors. And I hope, as you guys have watched this video, you guys realize that. So I think those investors that flooded out in fear of dilution are going to come rumbling back in, especially after CleanSpark announces whatever growth candidate they're potentially looking at. So the other reason why I think the share price dipped is overall market conditions. You saw EV companies, you saw clean energy companies, all in all, fall on Wednesday and Thursday. So the first reason I think this is because of the Nikola fraud. Nikola ruined investors' trust in growth companies in particular, and CleanSpark is definitely a growth company. So many people, so many investors invested in Nikola in hopes to make quick money. They saw the story that Nikola was portraying, they saw the growth that they were anticipating, and they bought into the story. However, when the number one growth company that investors were looking at comes out to be fraudulent, that leads to these weak hands selling out of Nikola or being forced to sell other positions in clean energy stocks or other growth companies in order to prevent margin calls. So that's reason number one, I believe, that the markets fell, especially surrounding EV companies and clean energy companies, because a lot of the same investors that were invested in Nikola were probably invested in CleanSpark and Workhorse and Tesla, companies like that. So somewhat unrelated, I believe that Nikola also caused unrest surrounding SPACs. Nikola was the creator of the EV and SPAC hype. They were the first SPAC that just skyrocketed out of the gates after the merger was complete. This led to a lot of investors thinking that SPACs were easy money, which is why a lot of weak hands flooded into the stock in particular, which again cycles me back to my original point of weak hands being invested in the stock, and then when something goes wrong, they sell out of all their other growth or SPAC plays. So the last idea I had of why we saw a downturn in CleanSpark stock is simply because of Tesla. Their battery day was simply overhyped. The markets were disappointed, to say the least, in what they heard and what they saw from Tesla. They anticipated a short-term catalyst. Instead, Tesla presented information that will occur over the coming 3 years, not the coming 3 months. So again, you had a lot of these weak hands sell out of their shares of Tesla, which in the same case as Nikola, forces them to sell out of all their other growth companies, especially EV or clean energy companies. So one thing that needs to be said, especially whenever these market downturns happen, is that these weak investors are selling their shares to holders of the company that want to be invested for the long term in particular. And that is no exception with CleanSpark. We've seen CleanSpark shares go from $15 a share all the way down to $10 a share, and we're just now finally starting back on the uptrend. Today, we're just at over $11 a share. So when these weak holders sell out of their shares of CleanSpark, they're selling their shares to investors like me, who don't have any plans of selling their shares anytime soon. What that leads to is a less amount of shares able to be traded on the public markets, because my shares aren't going to be publicly traded in trading hands every single day of the trading week. They're going to be sitting in my portfolio, they're going to be sitting in my possession, and nobody else can touch those shares. So at a certain point, when all these weak investors sell out of their shares and these shares go to long-term investors like me, there isn't anybody willing to sell anymore, which is when the buying pressure picks up again and we see the next big move up. So that is just another catalyst of, why I think CleanSpark stocks is going to skyrocket over the coming months and years to come. So let me know if you guys agree with me down in the comments section, whether or not CleanSpark is going to skyrocket over the coming months. I certainly do. Historically, whenever CleanSpark announces any offerings or share dilution, the share price absolutely explodes and keeps on humming without a hitch. And if you guys are new or returning and not yet subscribed, hit that subscribe button down below. Turn that subscribe button gray. If it's not gray, you're doing it wrong. On top of that, if you want access to my members-only Discord, become a member below by hitting the join button right next to the subscribe button. With that, guys, have a great rest of your day. Have a great weekend. I should be back on Monday with a brand new video. Peace out.